Well, let's get started because we have a lot to cover today, as Constantine mentioned. And if you remember last week, we we started this section and went through the research strategy. And today, oh my goodness, my bar will not. Okay, there we go. Today, we're going to start by talking about budgets and wrap up this section. And as Constantine mentioned, then we'll go into the individual ancillary documents and a little bit on the forms. So when we're talking about budget, the first question is, does the budget really matter? And the answer is absolutely yes. The budget is very important. It provides supporting evidence for the grant proposal, so it should tell the same story as your research strategy tells and your specific aims tell. It gives the agency a roadmap for how you're going to spend the money that they're about to give you. And while there's some room for making adjustments throughout the project period, the expectation is that you pretty much stay on track with your spending. It establishes financial or fiscal responsibility. This is really an agreement between the granting agency and you on how to spend the money that is taxpayer money. And so this really helps provide clarity to the reviewers on how you plan to spend the money. And it's another way to tell the story. So we talked about before, some people read the budget first, some people read the aims first, some people read the commercialization plan first in a phase 2. We don't have any control over that, so we need to always tell the same story. This slide is just a reminder that the aims are still the heart of your proposal, even in the budget. So all of your money, everything that you ask for NIH to support in your budget should be directly tied to your experiments and the work you propose in your specific aims. So everything needs to align with those specific aims. For example, you're not going to ask for travel if you never discuss travel related to any of your efforts in the specific aims. A couple of important points about the budget. The company is always the primary applicant, and the award is always made to the company. If you have a subaward to a research institution, the company sends that money to the research institution once they're invoiced for expenditures. The budget is negotiated at time of award, and as a reminder, that's if it's negotiated at all. In my experience, budgets are not always negotiated, but they can be. The budget should reflect the work proposed, and we talked about that work proposed should reflect the goals of the program and the appropriate phase. So you're going to you would propose if you're submitting a phase 1, you would propose a limited feasibility study, not a large multi-year clinical trial. So those things need to all align. The budget needs to align with the work proposed. The work proposed needs to align with the project or the program that you're applying to. We also discussed developing a strawman budget early to ensure the program meets requirements. This is going to help you determine whether you're going to do an SBIR or an STTR based on how much money you need to go out the door. If you are doing an STTR, or if you're going to do a subaward with a research institution under your SBIR, which remember is allowed just at a smaller percent, one of the first questions that research partner is going to ask is what's their allowable budget. And so doing that strawman budget early on will help you kind of come into range with what they may have to work with. Each institute and center establishes its own budget ranges, and they have this normally not to exceed the statutory limitations set by the Small Business Administration, which currently at NIH is $314,363 for a phase 1 and $2 million and some change for phase 2. And that's all in. That's direct and indirect. However, NIH has received a waiver from the Small Business Administration to exceed these totals for specific topics. Now, there's over 30 pages of waiver topics. Topics are organized by individual institute and center. Earlier, the budget waiver topics were pulled from the internet earlier this year. That link is now back up, and you can view those waiver topics. Even though the waiver topics were pulled down, NIH still allowed waiver topics during that period of transition. So even though we have this, we know we can ask for budgets more than 314,000. The details on the NIH budget from their budget language is murky and can be vague, and we're going to look at that. Other agencies have their own budget caps and rules, so we're only talking about NIH in this instance. For example, NSF has a very hard cap at, well, it's now 305. So if you submit a proposal to NSF for $306,000, you will be declined immediately. The ITEP program is a program from NIAID and NHLBI, and looking at their budget policy, they both have waiver topics available that allow budgets above that statutory limit. The total funding, they say in their language, normally may not exceed $300,000 per year for up to 2 years in a phase 1. Budget request at or near these hard caps should be well justified. TABA funds, which we'll go through exactly what TABA means in a little bit, can be requested in addition to the phase 1 limits. So they're talking about that 300,000 as total cost, direct cost, indirect cost, fee and profit, that equals your total cost. That's your all-in cost. But I want to look a little bit closer at this budget language because while they say that those budgets will generally not be accepted, or they will not generally allow, award budgets over 300,000. Let's take a closer look at that language. You can see with the purple arrows below, first is where they say, with the budgets up to 300,000 total cost per year for up to 2 years. But then they say requests for these budget levels must be well justified. In all cases, this is what's really important, in all cases, applicants should propose a budget that is reasonable and appropriate for completion of the research project. So that's why we say it's soft budget language. While they tell you they like your budget to be around this amount, what they really are telling you is you should propose a budget that's fair and reasonable for the work proposed. Now, the next arrow is also important. It's important to note that program staff does not provide prior approval for budgets that exceed these amounts. You put in the budget that is fair and consistent for the work proposed. If you're going to be awarded, then there is a negotiation period. This is NHLBI's language. This is in the omnibus solicitation is where I'm pulling this. I'm pulling it from the topics. Within the omnibus, there's a link to the topics and research interest of every institute and center, and this language is in there. So again, NHLBI say they may occasionally fund budgets above 300,000. However, you should prepare to negotiate your budget, and you should prepare a budget that's fair and consistent with the work proposed. Again, this is just reiterating that propose a budget that's fair, reasonable, and appropriate for the completion of the project. The budget should be consistent with the work that's reasonable for the phase that you're applying to. We could just talk about that vicious circle on and on again, but those two things really are very closely linked. Okay, let's talk about types of costs. So I'm going to talk about these in this graphic from the least restrictive to the most restrictive. So the least restrictive, which is totally unrestricted, is the fee or profit. Now this is allowed in SBIR and STTR only, and only the small business applicant can claim this fee or profit. This is tapped out at 7% of your total budget, but it's completely unrestricted. You may use it for anything that you want, including things that are often not supported by SBIR funding. The next most restrictive is the indirect costs, and we will go through each one of these costs individually and dissect them. But this is also referred to as your overhead or your F&A costs, your facilities and administration. This is sort of general operating expenses that you need to sort of carry on business, but not specifically directly tied to the project or to the specific aims. The most restrictive is direct costs. Direct costs are directly linked to specific aims or work proposed in your phase 1 application. So what's the difference between indirect and direct costs? Well, as I mentioned just a few seconds ago, direct costs can be tied specifically to work you're proposing in your phase application, either in your phase 1 or phase 2. So you can tie the costs associated of a particular task or activity specifically to one of your aims. That's a direct cost. So we look at things like salaries or subaward, or if you're going to pay a consultant. If you're going to do project-related travel, let's say that you are working with a collaborator in another state and you're going to go visit 2 times during the project period, that is a direct cost. Fee for service, anything that you need to buy, materials and supplies, where a reviewer can see, oh, you're using, you need 15 ELISA kits to do your work, and you're going to buy 15 ELISA kits. The indirect costs are everything else, anything that cannot be directly tied to a specific task or specific aim. So that includes office supplies, general office supplies. That includes professional services like a bookkeeper or an accountant. That includes utilities and rent associated with where your company operates, payroll taxes, general consultants. So if you have a general business consultant that you're working with, that's not working specifically on the SBIR, those types of costs are what we include in indirect. So again, direct costs can be directly tied to the project and are required to complete an activity that is funded by the grant. Salaries and wages, materials and supplies, specific aim-related travel, visiting collaborators, going to study sites, whatever it might be, consultants specifically working on this project. So if you have a general consultant in your company who helps you with all of your regulatory issues, totally fine. But if they're going to do something specific related to what you're proposing in this project, then that becomes a direct cost, and you're going to ask for a quote from them specifically to meet the requirements of this proposal. Those subawards to research institutions are direct costs. And then fee for service, which we define as an item per item cost. So, histology on 10 slides at $100 per slide. NIH direct cost budget categories, they're pretty consistent across most federal agencies. Most use the same generic budget form. The first is senior key persons, and this refers to W-2 employees. These are not contractors. These are individuals that the company will pay payroll taxes on, and this includes the principal investigator. That's the first person we always list under key persons, is the principal investigator. These are people that you want to attach a biosketch for. So if somebody has special skills or expertise that you want reviewers to see, they have to go in that senior or key person so you can attach a biosketch. We calculate calendar months effort for senior or key persons by looking at the project period. If it's a 12-month project period and they're going to spend 25% of their time on the project, then their calendar month effort for that project is 3 calendar months. If it's a 6-month project period that you're proposing, we calculate their effort based on 6-month project period. And then we calculate salary based on that effort. So we don't ask NIH to fund 100% of somebody's salary, because it's impossible for somebody to work on a project 100% of the time. So we ask them to fund a percentage of the salary that correlates to their effort on the project. So I show you the math on how to do that here. The next budget category is other personnel. This is typically lab personnel, technical personnel, might be a lab manager or a software engineer, typically individuals who don't have specialized expertise or skills required. This might be a place where you have positions listed that you don't have a candidate identified for yet. So if this is a to be determined or to be hired if awarded the grant, and you don't know who's going to fill that role, you can put that person in other personnel. Equipment is defined as any single item valued at over $5,000 with a life greater than 1 year. So typically, there's no equipment permitted in a phase 1 application. Now, a laptop, for example, is not equipment. A laptop costs about $1,500. Even if you're buying five laptops for your team, that's not equipment. Equipment is an autoclave or a very expensive microscope that costs, $6,000 or whatever. So it's a single item valued at over $5,000. Travel must be directly related to the project. You can't request travel support to go to a trade show and set up a booth, but you could request travel to go to a scientific conference to present your findings from your phase 1 project. Next is other direct costs. This includes several subcategories, including materials and supplies, publication costs, consultant services, computer services, the subaward or contractual funding, equipment or facility rental and usage. Now, this is not where you put your rent. That's not what that line means. This line more refers to if you're going to rent a specific piece of equipment during the project period. Alterations and renovations, we don't use that in SBIR. And then there are blank boxes where you have the opportunity to write in your own cost categories. And those typically include things like fee for service, the TABA funds, which is up to $6,500 in phase 1. Other, I sometimes write in there if there's human subject stipends, I'll write those in there. If you're doing animal studies, I might write in animal studies as its own separate line item so reviewers can see the source of that large expense. Again, we'll talk about TABA funds in depth in just a little bit. Oh, we're going to talk about it now. Here is the NIH TABA policy. The purpose of TABA is to provide additional access to technical and business assistance that's typically not covered by SBIR funds, really to help you make better technical decisions, solve technical problems, minimize risks associated with your project, and develop and commercialize this technology. Really, if you think about problems or issues you may have and support you may need to help you bridge that valley of death, that's sort of what TABA funds are designed to help you start to address. You cannot cover the valley of death with TABA funds alone, but it'll certainly help get you there. So eligible expenses include customer discovery. So for example, you could hire a provider like Foresight, who's working on the ITEP program, to conduct a market assessment for you, sort of a go, no-go, a look at the competitive landscape. They provide an assessment of the market size, dynamics, and opportunities. And there are lots of TABA providers out there. So you can use this $6,500 to get this sort of market assessment, customer discovery work done. This work is very, very helpful to collect in your phase 1 because it's really great to use when you're writing your phase 2 commercialization plan. You can use it to do expert or end user interviews. You can use it to develop business strategies. You can use it for product development consultation, or my favorite, regulatory and or reimbursement consultation. You have 2 options at NIH. You can, and again, this varies by agency, so we're only talking about NIH here. You can either request your own vendors, and if you decide to do that, you can request up to $6,500 per year for phase 1 and $50,000 for phase 2, which we typically split $25,000 and $25,000 for year 1 and 2. We write that in a line. I'll show you what that looks like in the budget in just a minute. And you include a detailed description and rationalization of what you're going to do with the TABA money in your budget justification. I also would highly recommend you attach a letter from the vendor with their associated fees, which should be the $6,500. And this amount is above and beyond the phase 1 award. Now, I will tell you that I calculate TABA funds right in my budget. I calculate the fee and the profit and the overhead, everything on TABA funds. I've never had a budget that was requested by NIH to pull those out. And so they can just go on your line item and it can be included in the calculations. The other option that you have is to use NIH's provider for the TABA assessment. If you want to do that, then you just leave that blank. You say you're not requesting TABA funds, and then within your phase 1 period, you just reach out to NIH and you can request the TABA services. Whoops, not sure what happened there. Okay, here's a look at how we put TABA in the budget. You have to physically type in these words in the budget form. And according to the guidelines, you'll find this information in the guidelines. The words you must type in are technical assistance or you will get an error. So it must be technical assistance and then the $6,500. There's another form where you check if you're including a request for technical assistance or TABA funding. And if you check yes on that, then it will flag an error if you don't have the words technical assistance on your budget justification. If you do not check that box and you are not requesting TABA support, you just don't check the box or you say no, and then you do not have to put technical assistance in your budget. Okay, let's look at some, Adele, any questions, or anybody who's watching chat, any questions about that I need to tackle about direct costs?
Well, the chat has been popping off like it's 1 a.m. in the club, but I think I've handled everything. There is a couple of questions that just came in. One from Don, doesn't the new 15% indirect rule for NIH apply for SBIR and STTR? That one I can actually address because the last guidance I saw was that it is still in review. So there had been no, confirmations yet. Keep an eye on it though. That's what I would say. Because yes, if it does come out and it is actually deemed to be applicable, then yeah, your indirect rate's going to be capped at 15%.
Yeah, but NIH did issue a notice saying for now, all previously negotiated indirect rates are in effect until further notice.
And then are expenses associated with I-Corps considered TABA expenses? That one would be a no because I-Corps is something that is almost like a separate program during your phase 1, and I think you can do I-Corps during phase 2 as well. Can't you, Chris?
Yeah, but at NIH, you apply to be part of I-Corps through a grant, a separate grant. That's an administrative supplement. So we don't include it at NIH. Not the case for NSF, but at NIH.
Those are the only ones that came in.
Okay, great. Well, thanks for keeping up with in the club. Okay, let's talk about indirect costs. So indirect costs, as we mentioned, are those things that cannot be directly linked or connected to activities that you're proposing in your grant. So things like health benefits, rent for the company, phone, internet, printing supplies, a copier, access to a copier, general office supplies, sales and marketing efforts, legal, accounting, other professional services, depreciation, bad debt, and equipment rental. Now, equipment rental, if you need a very specific piece of equipment for the work that you're proposing and you are going to rent it for a period of time to use on the project, you may be able to squeak that as a direct cost. But if we're talking about you have a lab full of general equipment that is rented to support your lab in general, that is an indirect cost. So you may or may not have an internally established overhead rate. I'm going to guess you probably don't if you're a brand new startup. And you may or may not have a federally approved overhead rate. Again, I'm going to guess you probably don't. If you do not have a federally approved indirect rate, NIH's de minimis overhead rate is 40% of total direct cost without further justification. So that's what we use. The standard for SBIR, STTR is 40% indirect cost. Now, they allow this under the assumption that the company has done sort of like a back of napkin indirect calculation, and your overhead rate is at least, if not more than that 40%. You may be asked to provide documentation on how you got to that 40% indirect rate. So you can pretty much just Google, calculating indirect rate and see where you're find a spreadsheet and do some messing around. Odds are you'll come up with at least 40%, if not a lot more. One thing that's different about SBIR is we do not use total modified direct costs when we're calculating that indirect. I'm going to assume that a lot of this will make sense to many of you because you're university faculty. If it doesn't, then ignore it. We don't need to go that far in the weeds. But usually on research applications within other programs, we use a total modified direct cost, which means we only take the indirect rate on the first $25,000 of a subaward. We do not do that in SBIR. We take the full 40% on the full subaward amount. Now, If your budget is very, very high, okay, and you're looking for a place to cut costs, to reduce costs that won't impact your efforts very much, that's a great place to just make a small cut and use a modified total direct cost instead. But the rule for SBIR is that we do not do total modified direct costs. Sometimes even reviewers don't know that rule, and they'll make sort of snide comments in the summary statements. But I assure you, I verified this multiple times with NIH, and we just don't do it in SBIR. Okay, the fee or profit. This is the least restrictive line item in the budget. That means we always want to collect the full 7% allowed. So never take a reduction here. This is a statutory allowable cost. According to the actual statute of the program, you are allowed the 7%. Do not leave it on the table. You do not get brownie points for only asking for 4% of profit. Sometimes an agency will say, are you sure? Could you reduce your profit at all? The answer should always be no. You need this unrestricted money. It is not a direct or an indirect cost, and it can be used for any purpose, including not related to this SBIR award. So there used to be a program officer who would talk about you could take your whole family to Hawaii if you wanted. It is totally unrestricted. I wouldn't recommend it, but you can. And the fee, as I mentioned, the fee applies only to the small business, not any other participant or subaward. Now here's a simple sample budget from a phase 1 STTR. You can tell that, this actually looks like an SBIR, not an STTR. These are the budget categories that we covered. And we're going to go through a budget justification section by section in just a second. But you can see how that subaward actually becomes a line item within your budget. So there's a whole other budgeting process related to the subawards. They have their own budget forms. And then you carry that number over and it becomes a line item in the company budget. And you can see here, we calculated that 40% on top of the total 110,000. We did not do a total modified direct cost. Now, let's talk about the budget justification, because I think this is so important. And I spent an inordinate amount of time on budget justifications, because I think it's a really great opportunity to eliminate questions and concerns from reviewers. So I think if we provide a really clear and concise budget justification and eliminate the opportunity for reviewers to sort of think there's fuzzy math or anything, I think it really strengthens the proposal. So we're going to prepare that budget justification in the exact same order that those line items appear on the budget form. So that means category A is always key persons. That's always the first one. And that means the very last thing on our budget justification is going to be the total phase 1 budget cost. For all categories found on the form, if you are not requesting funds for it, still include it, but just put not applicable or no funds requested. And then all project years go on one budget. So if you're doing a multi-year project, you do not prepare a budget justification for year 1 and a budget justification for year 2. They all go on the same, and this is how I do it. I provide a breakdown for each cost category by year 1, year 2, and then I provide the information for all years. All right, here is a look at the first budget category. Now, I like to open the budget justification with a paragraph that just reminds reviewers a little bit about what you're doing and who the team is. This is also where if this is a budget waiver topic, I'll mention the budget waiver in that section. Again, no prior approval is given for budget waiver topics, but it's nice just to let reviewers know that you are operating under a budget waiver and cite the budget waiver that you've used as reference. So here we have 2 team members. You can see the level of detail. We always lead with the principal investigator. You can see the level of detail I provide, a little bit about his responsibilities in the project period. I also do the math for reviewers. So I say what his salary is, how much effort he'll contribute, how long the project period is, what percent effort that is, as well as calendar months. I provide both ways so that they can clearly see that. and let them know the total request for the year. Same thing with the CEO, who I'm requesting $5,000 for. Provide the annual salary, the percent effort, and the total request. And then those individual requests, we move to that line to let the reviewer know the entire senior key person section budget is $65,000. Other personnel is where we talked about you put individuals who don't have special expertise or that you have not hired yet. Do the same thing here with the project effort, a description of their role, breakdown of the salary. Now you can see in the instructional designer, this is a position that has not been hired yet. Tell a little bit about what they're going to do. And then also, this is really important. I always add a sentence or two talking about how you will recruit and identify this person. If you already have candidates in mind, I would mention that here. But identifying and hiring, recruiting and hiring staff, project staff, is a major source of project delays, and reviewers tend to sort of get their feathers ruffled about seeing to be determined staff. And so we want to sort of try to set their mind at ease and let them know that you're in a community that has a large pool of qualified applicants for this position. You might tell a little bit about what the requirements are for hiring this person. You might tell a source that you will go to hire them. And like I said, if you have 3 or 4 candidates already in mind, or you're going to hire from internally, you can say all of those things there. Travel should be relatively minor unless you have a project that is multi-site. That would be highly unusual to see in a phase 1. Reviewers are skeptical of high travel budgets. And they'll typically ask for ways to reduce travel if possible. They do that, and then they also have concerns about teams that are throughout the country and that are not meeting in person. So it's a little bit of a catch-22, but we try to keep travel reasonable if possible. You can see that I use the GSA travel schedule, which is the government's travel schedule. You can just Google GSA travel schedule 2025. And it will tell you the cost for a hotel and per diem for each day in various cities. I just simply look at airfare for that destination and kind of ballpark it. If you don't know the city that you're going to, you can just make general guesstimates here, but try to sort of base it on some valid source and let reviewers know what that source is. Whoops. Okay, participant and trainee costs, we never use those in SBIR. These budget forms are used for all different kinds of grant programs, and so not all line items are going to apply to this program. For materials and supplies, I like to do a little table. Sometimes I provide even more detail depending on the project and how much information they know about what they're going to purchase. And then, provide the total for the materials and supplies. Here's consultant services. You can see we provide a little bit of an overview of the individual consultant, what their expertise is, and what their role will be on the project. And then I always mention that there's a biosketch and a letter of support attached, and provide the total consulting fee. We do that for both consultants here. And then for the subaward, all that's required is I typically just point to it and tell reviewers, see attached subaward budget, and say the name of the university that is the research partner, because they have their own totally separate budget. So just letting a reviewer know that that's attached. F8 is where I've put in the TABA funds here, so you can see what it looks like to request TABA funds. It's all you need, and then we attach the letter of support in the biosketch. Then provide the direct cost. The indirect cost, I show the calculation for that. Therefore, a rate of 40% is requested to support indirect. Then we add up the direct and indirect, and then calculate the profit. Now, I like to do this little table. See, this is where I was talking about you have the total project cost at the bottom, so a reviewer can very quickly see what the total project cost is. I like to do this little table at the bottom, especially if you're doing an STTR, but even if there's just a research partner involved at all. The way that the percentages are calculated, the splits for SBIR and STTR have a lot of room for interpretation. And there's no hard and fast rule on how to calculate those. And program officer to program officer can calculate them differently. Meaning, do we include consultants? Do we include fee for service? Sometimes those vary. And so my idea with doing this little table is to sort of immediately set reviewers' minds at ease that, first of all, you're aware of the required splits and that according to your math, you're within the requirements. So this one actually isn't within any requirements. I should change that. Because to be an STTR, the best university would need to be doing a minimum of oh no, I'm sorry, they're doing 30% effort. So they need to do a minimum of 30%. So they have met that requirement. The small business is doing 63%. So a reviewer could very quickly see, okay, the company is doing the majority of the work, just a little bit is going out to the research institution. You don't have to do that table. I just like to do it. Okay, Del. Questions in the chat?
No, I think I've covered most of the other things, but since there were so many questions on a budget, do we just want to take a quick like 5 to 10 minutes and let people come off mute and ask questions if they have stuff?
Sure, absolutely.
Or you can also drop it in chat too. And rather than read a message from me, Chris or I will answer it. But I have a question for you, Chris, while
Yeah.
people decide if they have questions. What is the like biggest area of pushback that you have seen in budgets that you've worked on? And what are some of the tips that you would give people to, not run up against those same barriers?
So I think the biggest area of pushback is typically staff salaries. So it's a real fine line between showing that your team is committed to the project and able to work on it, and front loading or stacking a team with a bunch of salaries. And so, being careful, that's what I was talking about. Like, you cannot say the PI is going to work on a project 100% of the time. That is not accurate. If the PI is also the CEO of the company, it's probably hard for them to even do 50% on a project. So being reasonable about the requirements or about the request for salary for team members, and not stacking. I think it's normal to have 3 or 4 team members. 10 under key person is too many. That would not go over well. So just being reasonable and being able to make sure that those individuals are doing meaningful contributions to the project. The other area that gets a lot of pushback is materials and supplies, believe it or not. It's silly, but gets a lot of pushback.
Any of our cohort members, additional questions just on budget? A couple things that I would like to throw out for people too, just to back up what Chris said. Fee and profit is always one of those ones you maximize as much as you can. Try never to actually impede against that or take against that, because fee and profit is your CYA policy. It's we didn't expect this, we didn't think about this, here's something that happened. Just like Chris mentioned, I always like to give the tongue-in-cheek example of, if you want to throw a champagne and caviar dinner for everybody when you get the award, hey, that's where your fee and profit does. But really your fee and profit is just oh crap, what's going to happen now? So yeah, try not to go cut into that too much. And even for the 40% indirect, they have that number for a reason. You have to remember, while you're doing your project, you're all supposed to be growing your business. So people go, well, I just need to get the project done. I'm not going to take any indirect.
Oh, that drives me nuts. Yeah.
As somebody that has done these types of reviews before, as somebody that's worked on so many of these applications, when I see that, I go, well, this is going to get rejected because you're not planning to be a business. It takes money to actually set up your business. So we do have a couple of questions. Okay, So is there any guidance on setting salary levels for positions you intend to hire? What is reasonable? Use GSA, or not GSA, use BLS wage data. That'll be the thing that they will actually go against. If you go to the Bureau of Labor Statistics or just BLS, Google BLS wage data. You can actually select by, and you're not going to select by kind of position. What you want to do is select by the role that they are going to play within the project itself. Use that information because anytime you get a lot of pushback on the why are you paying this person, $150,000 a year, that's because program officer went to BLS wage data and saw people usually make about 70K a year. What are you doing here?
Because that's geographic too. You can
Yeah,
put in your geography. So,
and you can even subdivide down to for some states, you can even subdivide down to zip code.
mm.
Question in chat here. If you get pushback on salaries and also materials and supplies, what are you left with to spend on that is uncontroversial?
Well, it's all controversial.
Yeah, and I think that's just the big thing is,
Yeah.
as long as, again, it has to be reasonable. You can't seem like you're just pulling together a team for the heck of it.
Yeah, and I think generally for NIH, the way those negotiations typically go are we want to fund this proposal. You proposed 346,000. We're able to fund it at 320,000. Can you do the work for 320? If so, send me a revised budget. So they're not necessarily telling you what to do. Reviewers may say things like, "Oh, you stacked your team. Your salaries are too high. Too many materials and supplies." But when you're actually negotiating the budget with NIH program officers, very rarely do they ask specific things. Usually, it's on you to determine, can you do the work for a reduced budget, and if so, where are you going to make the cuts?
Hi, Chris, Dell. Question related, you may have partially answered it. In an STTR, does it matter who you put on the company side in the budget versus the university side?
Yes, I think it does, because remember, the company has to do 40% of the work. And so you need to have somebody somewhere on the company budget, either a key person or other person who has the technical expertise to do some sort of work. So if you have a CEO who has worked as a pharmaceutical executive and has, taken drugs all the way to market and has all this wonderful experience, that is awesome. And they can be on your budget, and they can even be the lead at the company. But then you have to have somebody in the lab who has the skills to run assays if that person doesn't. So as long as you have somebody to do the technical work that the company is required to do, it can't just be pushing papers, then you're okay.
Okay, thank you.
There's also usually a question about, having advanced degrees or publications. And the guidelines will say you don't have to have an advanced degree. I will tell you that somebody on your team needs an advanced degree, and somebody on your team needs publications in a relevant field. And whether that person's at the university, at the company, an advisor, it doesn't really matter, but you have to show that somewhere.
Let's see. One question in chat, which I think actually speaks towards the question that was just asked too. One of the things to kind of remember too is that with NIH, your PI can act on an STTR can come from either the company or the university, but people do one or the other. If they're going to be on the university's budget, they're on the university's budget. If they're going to be on the business budget, they're on the business budget. You can't actually mix between the two. You can't have, Steve Krasinski, who is, part of the university and in their budget, and then he's also in the budget for the company. It has to be kind of one or the other there.
That's a great point. And I don't know if we've actually even covered that at all, but that's true for everything. And so what we try to do is, I have in one presentation on, sort of partnering with universities, I show the university on one side, the company on the other, and black lines. And then there's some gray area. And you just want to operate within the black lines, not in the gray area. So the company cannot use your lab at the university. You can't say, I'm going to carry this work over to my university lab and do it there at no charge. Can't do that. Now, if you have a lease agreement with the university and the company's in control of their own space and all kinds of things like that, that's fine. You have to have a very clear delineation between the university and the company. But that gray area that I'm helping over here, I'm a little bit over here, that won't work.
See, another question. Somebody specifically asking about things like materials and supplies, and do the reviewers understand the current inflationary conditions? One quick thing. I think you're talking about tariffs. Tariffs aren't inflation, they're a tax when you look at it. So that is one of the things. But you know, that's when you like have to justify the stuff is we expect that the price of this is going to rise 60% by the time that the period of performance is in effect. So you actually budget for that. And reviewers, while reviewers look at the budget and they look at the budget justification, they actually make determinations on the project. When it comes to actually negotiating the budget, as Chris mentioned, that's between you and the NIH program officers. So a reviewer can't go, well, I think that this is like too high. They should come in at like 300. That don't matter. A reviewer is going to be their own damn opinion. But when it comes to the actual NIH program officers, they're the ones that guide that. Anything you can add to that, Chris?
No, that's true. You see it on the summary statements actually, because the reviewers will make comments about the budget they want, and then there's a line, and then there's the study section review officers' comments, and those are the only ones we care about related to administrative. If they say you need to remove something from your budget, then we remove it from our budget. Whatever the reviewers say, who cares? Yeah.
But yeah, anytime there are those outside things that are currently happening, you put that in your justification, and then it's up to the conversation between you and the program officers on whether they're going to allow it or not. So that is something to, you know, definitely keep in mind.
All right, shall we move on? Okay, I think we are ready to start the next session.